advances right now, 12, almost 1300 odd declines versus 1000 odd advances in the broader end of spectrum. So that's giving a cue as to how the mid cap and the small cap 250 is also doing, right, Neeraj?
Yes, it is. I mean, I must say, I mean, the broader markets is a bit like how the IT index is today. In some sense, a bit quiet. I mean, if you leave out RHI Magnesita, Vodafone is up 7%, and then everything else is less than 5% on the Nifty 500 on the gaining side. So Vodafone, DOMS, IGL, Divi's Labs, Surma, Newland. If at all there is a pattern, that is around the CDMO companies. And I think this has to do with the fact that Roche, Eli Lilly, etc. are all investing into India. So that's part one. On the losing side, right, you see a KIOCL, Tata Investment, but then the list of names, Happiest Minds, Shyam Metallics, etc. are all kind of muted. So not really gangbuster moves at the broader end of the spectrum, but it is the season of IPOs, and I think Hiral, Mahima and me look forward to talking to two companies where the IPOs open and might be of great interest to all of you who might be wanting to take a decision on whether or not to subscribe to these. So let's start with the first one, and Mahima, toss it back at you for the mega LG Electronics IPO. Tell us all about it.
It's 25 years since we've not seen a consumer durable IPO, and LG Electronics opens today and ends on 9th of October. It's roughly 11,600 crore IPO that we're going to see. The price band is set between 1,080 to 1,140. It's completely an offer for sale. Around 15% is what we're seeing, in terms of parent company selling off their stake. So that's with regards to where the parent company is looking to divest. Of course, just a brief about the company. Everybody knows the brand per se. It's the second largest player in India in terms of home appliances and consumer durables. In home appliances includes your refrigerators, washing machines, air conditioners, microwaves. In the consumer electric space, there includes televisions, home entertainment systems and audio devices. And even in terms of smart devices, they have counters like smartphones, smart TVs and IoT-enabled products as well. In terms of where the financials are concerned, well, the company has seen a decent growth in terms of revenue. 13% 3-year CAGR is what we are looking at. EBITDA and net profit has seen a 3-year CAGR of 22%. The margins have significantly improved. FY24, it stood at around 10.4% versus that of 12.8% in FY25. With regards to where the overall picture in terms of valuation is concerned, the market cap at upper band is around 77,380 crores. And if you take a look at the three scenarios in terms of the valuation, of course this is the valuation at the upper band, but if you take a look at the three scenarios in terms of how growth could be going forward, and then take a look at the PE, at a 15%, we can garner a PE of 30 times in terms of the PE, 20% at 29 times, and 25% around 28 times. And this is largely in line with where the peers are also trading at with regards to Blue Star, Havells, Voltas, LG India. So valuation-wise, it is fairly valued at present. And this is something that the analysts also believe. This is with regards to the other players like Whirlpool, Crompton, Samsung, etc. So in terms of valuations, fairly priced, and even in terms of subscription, we are seeing good subscription numbers coming in as well for LG Electronics.
Right. Thank you so much for that, Mahima. In fact, we'll get in the management of LG Electronics. We have Mr. Atul Khanna, Chief Accounts Officer at LG Electronics, who's joining us on the show as well. And with him, we have Sanjay Chitkara, Chief Sales Officer at LG Electronics. Welcome to the show, gentlemen, and always a pleasure to speak to you both. My first question coming to you is, so far it's day one of the IPO. I know we've spoken about earlier as well in terms of how are you going to use the funds, etc. But from here on, what is the vision that LG Electronics is sitting on if you have to look at the next 3 years, taking into consideration the fundraise that you're doing, the kind of leadership that you already hold? So where from here on?
So see, this IPO will strengthen our ability to invest more in newer technologies, manufacturing and customer services, so that we can offer a better new products to our customers and a better customer experience. So in future, maybe customer can see better products and services, while our shareholders will grow with our share value. So I think this is a win-win outcome for everyone, including LG Electronics.
Sanjay Chitkara, our Chief Sales Officer, is also with us. And Sanjay, it must be a good stand to take when you come out for an IPO wherein you are in the leadership category across a bunch of consumer durable products, and now with this GST cut coming in, the timing couldn't be better. How do you forecast or how do you foresee the immediacy of revenue growth for you? And then we'll of course talk about the longer term as well.
See, we are very excited with this GST cut, and it's a direct enabler for our business, and it has improved the affordability of the product. With this, a brand like LG is more beneficiary because we have a better opportunity to cross-sell. Because if a consumer is coming to the store with a limited budget, now he has more money to buy some other products also. So we are trying to bundle it with other products like sound bars, with TVs. Similarly, we are also getting a trend of upgrade of the product. Like consumers are upgrading their product. A 55 inch is upgrading to 65 inch. A 300-liter refrigerator is upgrading to 400 liter. So such upgradation is happening.
Yeah. Okay. Just a follow-up question to that, Sanjay. That the domestic demand looks strong. I'm still looking for what do you believe could be the kind of revenue growth that could come in into sales or a volume growth that could come in. But part two of my question added to that is that most notes say that from a 6% kind of share of exports in FY25, you are possibly looking at about 10 to 15% kind of export share by FY30. So what's the domestic volume growth likely to be near term, medium term? And export growing to 15%, I'm guessing that means that domestics will grow, but exports will grow faster.
Yeah. So if we see before coming to LG's growth strategy, India is growing. And for our TAM, which is $41 billion currently, it's growing with 14% CAGR growth, and it will become $73 billion by 2029. So there is a 14% CAGR growth, and LG would definitely try to surpass this growth rate because we have very strong growth strategies, scaling of our B2B business, service business through annual maintenance contract, and we are planning to introduce many new products and missing categories. In future, export is also is a focused area. Currently, our export is 5%. Revenue terms, it is $160 million. We are exporting to Southeast Asia, Middle East, and African countries, 45 countries. So last year, over previous financial year, this year we grew by 45% in our export. But we will definitely add newer geographies for our export portfolio and new product category. Currently, our export is limiting to medium range product, that is refrigerator, washing machine, and compressor. But recently in 2023, we started manufacturing premium product in our Pune plant, like side-by-side refrigerator, OLED TV. For a developed nations and major economies, the premium product consumption is more. So this will definitely open new door for exports horizon. Our current factory is near to Western Coast, this Pune plant. We have very thoughtfully chosen Sri City, which is much near to Eastern Coast. By this way, we have covered both the coast of India, and we have also overcome the logistic barrier.
Mr. Khanna, hi, Mahima this side. Just want to understand one thing from an accounting perspective. You, correct me if I'm wrong here, you have a tax litigation of around 4,700 crore, for which my understanding is that the cash balance is enough to cover that. But just to give investors a perspective, what is this tax litigation regarding? And according to you, what are the chances of being, the outcome being in your favor?
As you rightly mentioned that there is a 4,700 crores of litigations which is ongoing. It includes all show cause notices as well, and these all we should not compare the litigation worth of value with our cash balance, because in last 28 years we never particularly paid any such demand, and we have won all our cases based on the technical and merits based. From either direct tax as well as from the indirect taxes as well. So, and All these cases that are going on are also particularly, we have won either at the first level of appeals or at the tribunal level. So we are not forcing any such probability of losing any such case. So we are confident that it would be all, with the pace of time, it would be all diluted over a period of time.
So, Mr. Khanna, so what you're trying to say right now is that this is something which you're confident of, that you will win this litigation. There will be no tax demand which you will have to pay in terms of the 4,700 odd crores.
Right. All our cases by each year, we have a good merits cases where we can won all those litigations without any demand.
And my additional question to you is, because everyone's talking about the opportunities and, you know, everything that LG is sitting on. Another weakness that, you know, brokerages are highlighting is the dependence on promoters, specifically when it comes to royalty obligations as well. FY25, you paid around 455 odd crores. What is the outlook looking like when you talk about royalty? Do you see that reducing over time? How is that entire structure going to pan out from here on?
So we need to understand why one pay royalty, because royalty is being paid for usage of brand as well as the usage of the technical know-how and the innovative R&D products, innovative products being provided by our parent. They have all platforms. We have Indian consumer insights. We share with them, they develop the product, we test it, and then we introduce it to the market. Based on that, we are paying the royalty to our parent on domestically produced goods. And by that way, we are paying our royalty rate, expense rate is 1.9% odd to our total revenue. And we are not forcing any such change, framework change in the going forward period. And changing the royalty framework is also not so easy. It depends on a lot of transfer pricing adjustments as well as tax regulations comes into the picture. So we have just settled it down, particularly 2 years back. And we are not forcing any such change in the royalty rate going forward. And we cannot call it as that it is a dependency, because parent has invested in the beginning 28 years ago, right? So particularly when they have seen that India is a market where one can invest and bring on all innovative products for the Indian consumers. And year on year, we are introducing a lot of new technologies and giving them a lot of other good product, innovative products, energy efficient products. So for that only we are paying royalty to them.
I was trying the conversation earlier, just a quick follow-up. Some idea of the growth rates that you guys envisage. I mean, for an investor to put in capital into your business, some inclination or some idea of what the growth rate could be.
See, our previous CAGR growth is 10.7%. And we will definitely, say, being a sales leader, I mean, it would be my best efforts, and we'll put all energy to surpass that previous CAGR growth rate. I mean, that would be our definitely the effort. And the way the things are favorable, the GST cut, IT relief, all these things have provided a more disposable income to consumers. And lastly, our products are just basics and very highly underpenetrated. We are not selling luxuries, and these products are needed to make daily life easy. So that demand of this, our products will definitely grow, and will definitely try to surpass our previous growth rate.
Sanjay, so just before we wrap up, I must compliment you guys on the pricing, right? Because everybody's talking about how well priced the issue is. But if you're citing a 10.7% CAGR of the past, whatever, 10 years, then you are under-promising, because the last 3 years you've grown much faster. 13%, as I'm told, on the revenue side, over 20% on the PAT side. Are you telling us you will grow lower than that?
No, not at all.
Not at all, okay.
Not at all.
Because you said you will cross 10%, so hence I'm asking, yeah.
See,
so our growth rate
whatever we promised.
Years is, yeah,
please, Atul. Yeah.
So our growth rate, which Sanjay ji explained, is since last 3 fiscal years, our CAGR growth rate is 10.7%, right?
Okay.
And so
maybe our numbers are wrong.
Surpass this number.
Okay.
Fiscal year 23 to fiscal year 25, our growth rate is 10.7% CAGR. So our endeavor as well as vision is to cross this number
Fair call.
each year.
Okay. Maybe I've erred a little bit on my math, but be that as it may, I'll take your number for it. You know your company best. So you'll grow more than what you've done, or at least try to match those numbers, which is good to know. But all the best for the IPO and the outlook ahead. Thank you so much, gentlemen, for taking the time out and being with us.
Thank you. Thank you very much.
Thank you. Thank you.
That's LG. We'll strive to grow at the same pace or better than what the numbers for the last 3 years have been. And exports will probably grow more relative to what they have done in the past. 6% current share, I think growing up to 10 to 15%. Okay, so that was one consumer IPO. Now we move tracks to a completely different kind of a company. Anantam Highways. And for lack of any better, lack of a descriptive word, it is an InvIT. If you understand an InvIT, viewers, and we've done multiple shows around it, you would know what Anantam Highways is into. But let's get the management to try and talk about what the company is about and why should an investor subscribe to this IPO. Jignesh Shah, Director and CEO of Anantam Highways, with us in our studios. Jignesh, great having you. Thanks for joining in.
Thank you for having me.
Now the pleasure is ours. Tell us a bit about your company.
So Anantam Highways is an InvIT. It's an infrastructure investment trust. And essentially for people who don't understand InvITs, I would like to kind of describe what an InvIT is.
Please go ahead.
It's essentially a trust structure like a mutual fund, but in an InvIT, you acquire infrastructure assets. And then you offer units to investors in the market, and then you keep on acquiring additional assets. So essentially, InvITs are yield plays, and then you overlay growth on top of the InvITs to create a consistent revenue stream for investors.
Okay. What is the purpose for this IPO, and would the proceeds be used for, I'm guessing it's entirely a fresh issue.
It's entirely a fresh issue.
Okay. And the purpose of the IPO?
The IPO proceeds are primarily going to be used for deleveraging purposes, leaving aside some for the issue expenses.
Okay.
Okay. So from a business perspective, one aspect is your deleveraging. The other aspect is the kind of predictability that you have on the revenue and the counterparty risk that you may face, because that becomes absolutely important when you're talking about annuity payment delays, the concession performance. How is that placed? Because clearly you're doing a potential 3 to 6 month delay in annuities usually.
Good question. So maybe I'll just take a minute to tell you about how differentiated our business model is. So InvITs basically you have a combination of pure investment management, and then you combine it with deep operating expertise, because you're acquiring assets which are going to be there for the long term. Now what we have done is that we put together a combination of, on one end there is Alpha Alternatives, who's a sponsor. Great investment management skills. We understand corporate governance. We understand how to optimize cash flows. But then we've combined that with the operations and execution excellence of Dilip Bilkon, one of the best EPC companies in the country, right? And our view is that when you are managing real assets, that expertise which a company like Dilip Bilkon can bring to the table is unparalleled, right? Okay. So you mentioned annuity delays. The track record of Dilip Bilkon is otherwise. All of their projects basically receive annuities on or before time. Yes. And that is how we are looking to differentiate ourselves in the marketplace. The idea is that you do a great job on operations and maintenance, which we are very confident that Dilip Bilkon will do. And the best part is that Dilip Bilkon is also going to be a pretty large unit holder in the InvIT. Okay. So we believe that that's an additional bonus, because there's a complete alignment of interest, from a long-term unit holder interest management perspective.
Okay, so if you could just elaborate between Dilip Bilkon and your company, who's got what skin in the game?
So the InvIT is going to be managed by Alpha Alternatives. Okay. The sponsor, investment manager, and project manager, which are the three stakeholders to the InvIT, are all Alpha Alternatives owned entities, 100% owned by Alpha Alternatives. The management of the InvIT is entirely Alpha Alternatives. The board today basically consists of 3 representatives from Alpha Alternatives and 3 independent directors. By the way, we have a phenomenal board as well. The operations and maintenance activity, the technical backend, will be provided by Dilip Bilkon, and they will be a large unit holder in the InvIT, exercising their rights as a unit holder.
So So post-IPO, what are the stakes for each side?
See, pre-IPO, the shareholding is 54% Dilip Buildcon, 46% Alpha Alternatives. We're getting diluted roughly by around 18%. So post the InvIT formation transaction, Dilip Buildcon will be roughly at around 44%, Alpha Alternatives 38%, and the balance public.
Enough skin in the game. Mahima?
Yeah.
So, since we were talking about Dilip Buildcon, just want to understand, you have identified new assets, right, that you might going forward expand into. Right now, the entire 400 crores that you're doing is going to be used almost entirely for debt repayment.
Yes.
So then further expansion, how are you planning to fund that, and what are the timelines that you have in mind?
We're starting off the InvIT with 7 completed HAM assets, residual life of around 13 years. So we clearly have longevity, predictability of cash flows. In addition to this, we have right of first offer arrangements with both Dilip Buildcon and Alpha Alternatives manages a very large road sector fund called the Build India Infrastructure Fund. Dilip Buildcon has 11 identified HAM assets, some of which are completed, some of which are under construction, but there is visibility of them coming into the InvIT, all of them, by between March to June 27. They will keep on coming in stages, but June 27 is the outer timeline.
So you're saying this is the acquisition visibility and timeline for the 11 plus assets,
Of the
and these are the, if I'm not mistaken, the right of first offer agreements that you have.
Yes, absolutely.
Right.
But in addition to this, we have the Build India Infrastructure Fund, where we are acquiring assets from other developers.
Okay.
We've already acquired 4 non-Dilip Buildcon assets, which also we plan to bring to the InvIT under the right of first offer arrangement. And we continue to evaluate other assets in the marketplace.
Okay. And to add to this, if you have to look at a longer term, does it also include, say, acquisition of toll-based road projects, or even, say, diversification into other infrastructure classes like renewable energy, transmission, to mitigate that single counterparty risk?
So today we are focused primarily on HAM assets, but doesn't mean that we are not evaluating toll assets. Currently, our focus is NHAI.
Okay.
We continue to evaluate toll assets. I mean, ultimately, it's a question of identifying and acquiring at the right risk-return matrix. Don't want to kind of bring on assets which are overpriced. So you will see us bringing in toll assets in the coming years, obviously at the right valuation. In terms of bringing in other sectoral classes into this InvIT, we will restrict this InvIT to a road InvIT.
Okay.
If we end up doing other sectors, we will do those through other platforms.
Got it. What's the kind of, I mean, because it's a newer asset class of sorts, though not as new, but still newer, what's the kind of return that an average shareholder can expect if they subscribe to the IPO?
So, I can't speak about the return, but
Ballpark, some color.
See, InvITs are basically yield plus assets. Unlike toll assets where there is variability of traffic and, you don't have consistency of cash flows, with HAM assets, there is predictability, right? And as I mentioned, we have 13 years left in the concession. So there's also longevity of return. What I would urge the potential investors to do is, we offer cash flow projections for the next 3.5 years. The valuation of the IPO, the InvIT is known. You put the two together, you should be able to, arrive at a ballpark distribution number. What I would also add is that, the initial formation is just part of the story. Investors will need to look at the growth element as well as they evaluate this offering, because ultimately, when you combine yield with growth, that's where, you will see the complete picture.
So just a follow-up, you're talking about the net the cash flow, right? Now, the policy currently is to reserve mandatory 90% distribution is required, right?
Yes.
So anything in terms of policy that you have which will go beyond for the surplus cash reserves?
See, ultimately, any decision that's taken beyond the 90% will be driven by, what alternative value accretion possibilities are there. So we will take appropriate decisions. I mean, if we are not having acquisition opportunities, we might even distribute the 100%. We plan to do quarterly distributions.
Okay.
Okay. Well, Jignesh, all the best for this and the times ahead. Thank you so much for taking the time out and being with us.
Thank you so much.
All right. That's the Anantam Highways IPO. And you heard the management talk about how it could shape up. Well, a lot of REITs and InvITs in focus as well. Kush Bora, since we have you with us and since we are on this topic, can you tell us a bit about how is the trade for some of these stocks currently?
REITs and InvITs, you mean?
Yes, please.
I think the one that I've been tracking rather closely and has done well is the Embassy Office Parks REIT, right? I mean, if you've seen the kind of moves that it's made, the gains alone, the growth in terms of the price movement alone is very encouraging. So yeah, I mean, it's not something that I actively invest in personally, but yes, if someone does want a flavor of these in their portfolio, Embassy is something that I've had a track of and can be considered on declines.
Okay, all right. So that's with regards to where REITs and InvITs are concerned. But with that, it's time to slip into a very quick break. But we'll be right back, so do stay tuned.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कार्तिक, सोलर मतलब सात्विक, ये हर मौसम में चलता है।
The best app to use is the NDTV app.
दुनिया भर में जब भी भारतीय मीडिया की चर्चा होती तो एनडीटीवी सबसे पहले जिक्र में आता है।
मैं आपका बात से सहमत हूं, उल्टे हम भी जब विदेश जाते हैं, the best app to use is the NDTV app.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कार्तिक, सोलर मतलब सात्विक, ये हर मौसम में चलता है।
The market's most influential voices, the visionaries who decode the future of wealth, unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी, सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
Welcome back. You're watching India Market Close here at NDTV Profit. The Nifty has slightly come down, now trading around 0.3% higher, come back to the 25,150 levels. The Bank Nifty also has come down a tad bit, now trading around 0.5% higher. The mid cap 150 and small cap 250, although are trading at the same levels as they were half an hour ago. Overall, in terms of where the advance decline ratio is also concerned, there's still more declines versus that of advances, but that gap is widening by the hour is what we're seeing. Kush, with regards to where the markets are concerned, we've seen 3.5-4 days almost now of markets gaining. Do you think this momentum is here to stay?
Sure, Mahima. See, right now, it looks like this is a buy on dips kind of a setup as long as the 25,000 mark is held. Remember we spoke a couple of sessions ago, even yesterday, that once 25,000 is taken out, bulls will have that much more confidence in going long. So as long as that is intact, I think you could consider a long position. If you have one, you can hold with a stop loss around the 24,900 mark. Heartening to see a couple of facts. DII buying has been rather overwhelming. Yesterday we saw a very big figure. The momentum is also taking the index highest. There is sectoral participation as well. Banks were doing their own thing. Now IT and even oil and gas have started to participate, in varying degrees. So all that is heartening. Couple of points of caution. The small and the mid cap space haven't really participated as much. So, that remains a bit of a concern. And purely on the technical front, the PCR on Nifty, Bank Nifty, both is close to 1.2. So slightly close to overheat territories. So this suggests that there could be some pullback that comes about. If you want to initiate fresh positions, Bank Nifty is still the index that we prefer, and any dip closer to 56,000 should be taken as an opportunity to go long.
Okay. Kush, I would love to take your ideas too, but I just hang on for a moment because there is this NDTV Profit exclusive. And you've got the perfect guy, Somit, waiting by to talk about this as well because he understands this space very well. Somit, I'm not going to read out the flashes. I'll throw it over to you first, and then we'll talk more about this.
Well, the big news that has come in is that, it's stock of the day firstly that we are going to talk about.
Let's talk about the IGL tax implications first, and then we get to the stock of the day, Somit. So let me read out the exclusive viewers for you. It's an NDTV Profit exclusive. It says that that changes in tax implications might lead to lower gas sourcing costs for IGL. This is as per sources telling us. And these changes may increase unit EBITDA by 1 to 1.5 rupees per SCM, which is 24% higher than the present EBITDA. Somit, now you come in and tell us first, what are the implications for IGL as a business for the same?
Well, if you see what happens, IGL sources gas, some of its gas requirements from the Gujarat region. Now, this is an interstate tax of around 15% VAT is being applicable. Now, this VAT of 15% will go away, and a CST that is of 2% will be applicable. So, what happens for IGL here is that their gas sourcing cost comes down drastically, and that will also help the company get more margins by selling every liter of gas. So that increases their gas margin by around 1 to 1.5 rupees per SCM, which is nearly 24% of the current number that the company has seen in the first quarter. In first quarter, the company had an EBITDA per SCM of 6.2. So this could increase by around 1.5 rupees, and this will also help the company achieve its annual guidance of 7 to 8 rupees per SCM. So a big margin benefit that is coming in from IGL from taxation purpose. 15% was the VAT rate that was applicable earlier. From October 1st, this has changed to 2% CST, which benefits IGL because the gas sourcing cost comes down in a big way.
And Somit, what happens here on? I mean, one is because the percentage changes in EBITDA that could come in as a result of this are cited to be about 24%, right? What does that do to multiples for a business like IGL? Because there are various pieces that impact the multiples of a gas distribution business.
So for valuation multiples, it won't mean much of an upside because already they're at a high, but this will obviously increase the EPS of IGL for FY26, what the analysts had estimated. They had estimated a number of around 6.5 to 7 rupees, but given that this taxation benefit will anyways boost the margins by around 1 to 1.5 rupees, so their estimates will go up, which in turn could lead to higher target prices coming in from analysts. And already we are seeing a 7% move in the stock because of this taxation benefit that has come in for IGL from 1st of October. So the third quarter margins or the second half of this financial year margins are expected to be at least around now 8 to 8.5 rupees per SCM, as against earlier analyst estimates of around 6.5 to 7 rupees per SCM.
Okay, all right. Somit, thank you so much for bringing us those details. Kush, I'll quickly come to you. Your view with regards to where charts are concerned for IGL?
Never been a big fan of the entire space, IGL, MGL, Gujarat space, whatever, you pick. Right now, it's the new spurt that the stock has received. In fact, it was already pricing in some of that today, and hence the stock was doing well throughout the day. Now the big jump has come up. Now 222 and 230, these are the two strong technical resistance levels which the stock could face going forward. So my suggestion would be, don't initiate fresh positions, rather book partial profit right now, hold rest of the quantity with 218 as your stop loss, and closer to the 230 mark you want to perhaps exit IGL.
All right, okay. Kush, what about your picks for the day? What would you go ahead and buy?
Sure. Going with both the calls on the long side, one of them is MCX. The stock, has done rather well in the last 3 sessions, given a good breakout, seeing a mild round of profit booking right now, but has held the green territory for the most part of the day. So yes, on the upside, 8,400, 8,600 are your targets. 8,000 is where you place that stop loss. The second stock which pops up again on our radar is LNT. This too has had a good run in the last 3 sessions. Today, right now, flattish to negative right now. But I think this is a good opportunity to accumulate something like, a Larsen. 38.25, 39.20 are your targets. 36.60 is where you place that stop loss. Also, this brings in us, a margin of safety element. So we prefer LNT as well, in volatile times like these.
Okay. All right. All right. So that's the picks that Kush has on his radar today. But onto our stock of the day segment. Today we have Bharti Hexacom, the stock. Let's try to pull that up, in fact, and see what it's doing in trade today. There you go. It's up almost 4% as we speak. And Somit joins us with what's exactly happening with this counter. Probably probably a note also coming in on this counter as to why the counter is buzzing. Somit?
The note exactly is the reason why the counter is up 4%. Axis Cap has upgraded its rating on Bharti Hexacom. In fact, it's an upgrade that we have seen for this mid-cap telecom company after a very long time. They have upgraded their rating to buy from and have also hiked the target price to 1,985 from 1,887. Now, what the brokerage here is saying is that they have always fundamentally liked this counter, but because it was trading at a premium to its peer, that is Bharti Airtel or the promoter entity, they never gave it a buy rating. But given the recent underperformance, they have upgraded their rating to buy and have also hiked the target price. Now, they are saying that even after this upgrade, they are valuing Hexacom at a 5% premium to Bharti Airtel India. But given the lower capital expenditure, superior growth and superior returns, this is quite justified as per the brokerage. Now, when it comes to the mobile segment, they're expecting superior execution with healthy trends to sustain even going forward. And on the back of this, they're expecting the company's FY25 to FY28 EBITDA to grow at a CAGR of nearly 20%. When it comes to the broadband segment, it is contributing very less to the overall numbers, but given the fact that it's quite underpenetrated, there's a strong growth prospect going forward, and on the back of this, they're expecting the broadband segment EBITDA to grow at a CAGR of nearly 35% over FY25 to FY28. Now, if you look at the valuations of Bharti Hexacom, what we are seeing at this moment, the 12-month forward valuation is close to around 16.4 times. Yes, it is at a premium to Bharti Airtel, but it is at a significant discount to what it used to trade earlier. Earlier, if you look at the valuations of Bharti Hexacom, it used to trade at around 19.4 times. And when it comes to the remaining upside for this counter, the 12-month consensus target price stands at close to 1,850, which suggests an upside of just 7% from the current level. But the highest target price on the street is by Jefferies, and that stands at close to 2,250, which suggests an upside potential of nearly 30%, while the lowest target price or the base case stands at around 1,380, which suggests a downside of 20% from the current levels of Bharti Hexacom.
All right, thank you so much for that, Somit. Samir, in fact, we have Samir Dalal also joining us now on the show. Samir, I'll quickly come to you. Your view with something like a Bharti Hexacom, would you be a buyer?
So unfortunately, no, I wouldn't be a buyer and buy Bharti Hexacom. So looking at a single location kind of a business, and for me, that is not something that makes up. I would rather buy a Bharti Airtel if I had to, but at corrections. And why do I say that? Because you're getting the play in the telecom space where we believe the revenues and profitability will keep increasing. You have these holdings in Infratel, which is the tower assets, which we believe will continue to do well and get more profitable. The African assets are now beginning to show more scale. And, as that also gets more depth and penetration and pricing moves up, the profitability from there will increase. Only thing is what, earlier came on also with your speaker is that, the stock has run up. It's performed really well over the last 2 years. If you look at Bharti, and, valuations have moved up quite a bit. So I would like a correction, but I think Bharti would be the play I make and not Bharti Hexacom.
Okay. Well, let's cut across. Gentlemen, stay on. Let's cut across to our banking editor and Mumbai Bureau Chief Vishwanath Nair in conversation with a panel of experts on super apps and financial ecosystems at the Global FinTech Festival. Take a look.
Yes. And similarly, you see entry of other players, right? You see asset management companies also try to become wealth managers, also try to become brokers, right? Recently, large partnership came into the country. They started with asset management. They've openly announced the entry into other areas as well. You see a Zero Adha starting with a brokerage, now talk about asset management and so on and so forth. So I think space we watched. If we all get too comfortable that we will never, people will not want to enter a space, we might get surprised.
Mr. Devanji, in your previous Saptar, you were with a bank that really pushed hard on a mobile app. Even the current bank that you're working with is a extremely tech-focused, front-end driven sort of a banking brand that exists, right? I've started from the point of I don't believe in super apps to now it's sort of muddled down and till Sandeep it's come to too soon to write them off entirely. Do you maybe have a slightly more positive view of that?
Yeah, I would, in between the thing, I would tend more to what it said. You see, if you're dreaming about that super app is going to be the one master app and will do everything for me, the answer is no. But the basic element of all the super apps is habit formation and retention of the customers. Now today, every bank on the street is trying to do that. Means we don't want you to get out of our banking apps to book your tickets, to book your hotels, to order some food, but we want you to keep on using it. So from that concept point of view, I think the super app concept will get modified. It will not be a super app, one super app, but it will be a federated ecosystem which solves many complex business processes a little easier. There are challenges, means which ways everyone will talk about the consent and the data privacy and all those things. They are at the top. But today, the advantages which the banks will have is per se, there is a degree of safety when it comes to a bank's name. That they will be more secure or they will be more conscious about the data privacy and something like that. But I think too early to write off super apps. It will not be a one major single app doing everything for you, but I think we will have to give convenience to the customer who will look in for it through different ways, and bank or any financier will try and embed that into any transaction that you do and allow him to do the transaction very smoothly.
Okay, I think we're done with the very polite one after one conversation part, but.
All right, so that was Vishy addressing from the conference itself. Now, it's that time of the show where we bring in our colleague Somit Sarkar, who joins us with all the chatter from the dealing world.
Be quiet.
Somit, what are you hearing today?
Well, fourth consecutive day of positive gains that we are seeing for the markets, and that's quite a good setup that has come in. Overall, dealers are indicating that there are strong buy flows that are seeing specifically in the when it comes to private banks. But some stock-specific ideas that dealers are suggesting to their clients. Firstly, is Shelley Engineering. Now, dealers indicate that smart HNIs and PMS have accumulated this trade in counter today, and there's a potential buzz of a QIP launch to come in soon on Shelley Engineering. For Canara Bank, dealers are indicating that there are buy flows on For Canara Bank, dealers are indicating that there are buy flows on DI desk. A positive development for this counter is expected soon. For HPCL and Indian Hotels, there are buy flows on institutional desk. Delivery volumes are expected to be on the higher side for both the counters, and a positive corporate development is expected here for both HPCL and Indian Hotels as well. When it comes to Star Health, there are buy flows on FI desk. They're expecting a turnaround quarter in the second Q2 to be a turnaround quarter for Star Health. And when it comes to LTI Mindtree, there are buy flows on large HNI desk. Dealers are expecting the Q2 number to be much better than what the street had earlier anticipated when it comes to LTI Mindtree. Patanjali smart investors are taking a positional buy call for this counter for next 1 month. So keep an eye out for Patanjali as well. And lastly, when it comes to Cipla, there are buy flows on expectation of some positive announcement that could come in this week. So keep an eye out for Cipla as well in trade.
Okay, interesting. So a lot of large cap stocks today in this list, right? Because you look at HPCL, Indian Hotels, LTI Mindtree, Patanjali, Cipla. The interesting ones are Shelly Engineering and Star Health on the lower end of the market cap curve, if you will. Shelly is an expensive stock, but interesting that it's finding mention today. And that stock is up 11% at 2399. So, Amit, thank you so much for bringing this to us. Samir, do you guys at your brokerage house track a Shelly Engineering or let's say a Star Health fundamentally?
So Star Health is something that we do cover. Shelly, unfortunately, is something we don't. I mean, we've looked at the company and what you said, we also found valuations very, very expensive, and we decided not to go after that company for some time till we see some fair pricing in that. So, that is the reason we're not. But now when you come to Star Health, the health insurance space is something that we do focus on. We believe that the opportunity to grow is great. Star Health valuations are not super expensive, but neither are they too cheap, right? So the question is, what are the kind of returns that can be made from here? If you are a long-term investor in the entire general insurance or health insurance space, I think the opportunity is extremely large because the growth is going to be great over the next few years. The government has also helped out in the health space, especially by giving, removing the GST on the health insurance policies. So, what will happen is people will be probably the same amount be able to increase the coverage that they have, which is very important and actually required. So I think the space is going to do well. But if I had to take a bet in the space, Star Health is of course not a top pick, neither is Niva, which are pure health insurance plays. We prefer to pick up something which is more in the general insurance space for the simple reason that the entire gambit of insurance is going to see a great uptake. And something like a ICICI General Insurance looks attractive. Yes, valuations there also look high, but then, if you look at it if they are able to bring their loss ratio down, which we believe will happen in the next coming couple of years, then the profitability will start looking a lot better, and then the valuations will not look as expensive. So ICICI is a top pick. You can followed by Niva Bupa and then by Star.
Interesting. Okay. And just wondering, Kush Bora, a Shelly Engineering, a Star Health, a Patanjali, any of these tradable?
So from a trading perspective, I would give some weightage to Star Health. I think, 500 and higher levels on the cards after a long period of consolidation, good 4.5 months. The stock's just not gone anywhere. Shelly, yes, was on my track as well. In just a little over a month, the stock's actually spiked for 70%, at its peak. Some correction, it's now giving you an uptick. If at all you want to play Shelly, it should be with a very small allocation. So I would be a little cautious on Shelly, as I said, for a small allocation for targets of 25 and 2650 with a stop loss around the 2300 mark. You could still perhaps consider a momentum trade.
Okay. Well, let's take it then to our bull versus bear segment. Focus is on trend. Mahima joins us with more. Mahima.
Right, so we're seeing the stock being under pressure today as well. Yesterday also post its business update, it closed around 2% lower. Today also trading around 2% lower. And we've seen that trend has been the top laggard on the Nifty 50 year to date as well. It's fallen around 33%. Since its inclusion in the Nifty also, it has fallen around 39%. With regards to what's working and what's not working, this quarter 2 update, we've seen that the revenue has come in, the growth has come in at 17%, which is the lowest in the past 4 years. The growth has been around 50% in the past quarters. We've seen a 20% growth in the last quarter. So the growth is slowing down for something like a trend. But on the other side, the revenue per square feet has grown steadily despite of the kind of aggressive expansion that the company is making. This is with regards to where growth is concerned. In terms of valuation, well, valuations were never cheap for this counter, but current trailing 12-month we are seeing, of course, which is at an expensive end, around 105 times. But there are brokerages that believe that this kind of deceleration in the growth and the kind of slowdown in the growth momentum that we are seeing could lead to some valuation correction, and overall multiple could compress going forward. In terms of 1 year forward also, what analysts are penciling could be around 73 times, still not cheaper, but at par with where the peers are trading at. In terms of where the overall operational metrics are concerned, the ROC has been improving for the counter, where it was 9% in March 2022. It's gone to around 31% in March 25. But we've seen that FIs have been selling, since its inclusion in Nifty, where it was at around 18% in March 22. As of June 25, FIs hold around 18% stake in the counter. Lastly, with regards to where brokerages' views are concerned, Goldman Sachs believes that margins will improve by around 165 basis points year on year in Q2 itself, and this is because company has taken initiatives with regards to adopting technology and reducing their overall cost. But on the other side, Equirus believes that the top line CAGR that the brokerages were earlier penciling in of around 25 to 26%, that seems largely unachievable. So this is with regards to where trend is concerned, and of course a bull versus the bear case. Samir, I'll quickly come to you. The idea was, and analysts were kind of penciling in a growth of around at least 20%, if not lesser than that, and it has come at around 17%. How are you viewing this, and going forward with the kind of correction we've seen in the counter? Do you think this is the attractive level to maybe make an entry, and maybe 17 to 20% growth is something that we should get used to for a trend?
Okay, so two things. First, 17 to 20% growth seems fair. It's good. SSSG has not picked up to the same expectation probably that the market was looking for. And that is because consumption has been a bit dull and slow, right? So once the consumption uptick starts happening, we believe that something like a trend, if the SSSG can move up to low double digits, 11, 12, 13%, then the operating leverages will play out. So then what you're talking of, these 100 times PE will obviously contract quite quickly. You also got to look at it that the kind of market that they're catering to, right? So they have two verticals which are their mainstay. One is Westside, the other is Zudio. Zudio is the absolute low, bottom of the pyramid chain that they're catering to. So as we see a recovery in consumption at that end, which I believe is going to come going forward, I think trend is something that looks attractive. Yes, valuations are high, but in any of these retail companies, the pure reason that valuations remain high is because the operating leverage is so strong. Their new stores are still, they've opened a lot of stores over the last 2 years, and they're still, just about making a limited amount of profit. As they get more footfall and traction, I think the profits will grow, and then suddenly you'll see a big jump in the profitability. So I'm quite positive on the longer term perspective. Is it going to be range bound for some time? I would rightfully say yes. It'd probably be in a range for the next 6 months. But once you see the growth uptake, I think this is a great opportunity to buy it. You've seen a decent correction from the highs of 8,000 odd levels accumulated over the next 6 months.
Okay, all right. So that's a fundamental view. But Kush, technically, do you think probably the stock has found some footing now? Do you think there could be some momentum from here on, or do you still see that some further correction is yet to come?
Mahima, before I begin, if the team could just pull up the 1 year chart of Trent, the 1 year performance of Trent. From the naked eye, it's very clearly visible that there's a falling trend line resistance. And if you can extend that, it forms a descending triangle formation, which is not a healthy sign. Strong supports at 4550 and 4600 levels, and resistances around the 5000 mark. Now, do I suggest a buy at these levels? No, because if 4550, 4600 support zone is broken, then I'm afraid much lower levels come into play. So while it might look like a good opportunity because of the fall that the stocks made, so close to the support zones, it makes it a slightly dangerous buy. So I would perhaps wait for some sort of a rebound, and once the bottom formation formations are complete, then you would consider not so close to the support level. So I will be a little cautious and more of a wait and watch approach on Trent.
All right. Okay. So that's the technical view, viewers, with regards to where Trent is concerned. But on to our top 3 stocks today. The spotlight is on Avalon Tech, BLS International, and Cyient DLM. Jasmeet joins us to tell us as to why these companies are buzzing and why you need to take a look at these companies. Jasmeet?
Well, right, yes, thank you for that. So I have 3 buzzing stocks in my radar today, which are buzzing on the back of volume. Starting off with Avalon Tech, if you look at the trading volume of the company, it's nearly 13 times on a 20-day average. And in terms of stock performance, the stock is nearly up 62% over last 6 months, and over a year, it's up 130%. Now, just to give guidance, what the management had quoted back in the Q1, given the results around the corner, while in the Q1, the management has revised the guidance in upward trend by stating at 23-25% earlier, which was at 18-20%. So they have increased the guidance on both lower and upper end. While we also see the management says that the operating leverage will go down in the other half of the year, and by FY27 it's going to reduce given the initial ramp-ups. While the next stock on the radar is BLS International. If you look at the stock performance on the 6 months and 1 year basis, it's nearly flat. Now, in terms of the buzz, why the stock is buzzing is on the back of volume. If we look at the trading volume, it's nearly at 11 times on a 20-day average. Now, the recent updates with regards to companies, the company's arm had acquired a hotel for 78 odd crores back based in the UK. Well, if you look at what the management had guided in the Q1 earnings was, they guide a 20-25% annual growth going forward, while they also expect the margins to be maintained at the current level, given the highest margin business is from the visa, which is nearly at 40%, and the rest, the overall group margin to remain at 28-29% going forward. If we look at the last stock in my radar, it will be Cyient DLM. While the stock is up nearly 9% over 6 months, and if you look at a year picture, it's opposite. It's down 33%. While if you look at what the management had guided and the trading volumes for today, it's at 15 times on a 20-day average. And back in the Q1, management had guided the growth focus to be in the domestic market, while they also have recorded the highest ever order book back in the Q1, it at 550 odd crores. So these are the stocks buzzing in trade today and what the management has told back in the Q1.
Jasmeet, thank you so much for giving us those details. Now, on the sideline of Global FinTech Summit, my colleague Rishabh caught up with Rajneesh Karnatak, who's the MD and CEO of Bank of India, to discuss about their Q2 deposit growth and road ahead for the company. Listen in.
Thank you for having me here. As far as our Q2 numbers are concerned, we have shown a YOY growth in our global business by around, say, 11% plus. As far as the global deposits are concerned, we have grown by more than 11%. And as far as the global credit is concerned, we have grown by more than 13%. As regards the domestic credit is concerned, there also we have registered a good growth, and we are growing at nearly 14% on a YOY basis.
Right. So, impressive set of numbers that were coming in for the bank. Recently, we had the RBI MPC, a lot of liquidity augmenting measures coming in from the bank, about 22, 23 of them, several of them, of course, related to banks. The first one, sir, RBI has opened its doors for large corporate credit. Talk to us about what sort of opportunities that opens up for banks like yours.
Yeah. So large exposure framework, that guidelines RBI has relaxed. So in that, what would happen is that banks like us, we can cut large checks. Earlier, there was a threshold limit of 10,000 crores. So that we can now, it is now relaxed, and we can go above that. So that would definitely help the large banks and banks of our size also to give large checks in large projects, and also for AAA rated borrowers whose borrowing is more, and there we can give better amounts of loans.
Right. So does that change any sort of plans for you going ahead? Does that help you approach newer avenues in the coming quarters?
Yeah, definitely. So there can be more uptick in the credit growth because of that, because definitely if we are able to cut more checks, larger amount of checks, definitely it will increase the corporate credit growth.
Right. So we're also seeing that acquisition financing has been opened up by the RBI. You're seeing what is the sort of sense that banks are having? Are banks very confident with regards to that, or are there apprehensions? What is the view of banks with regards to that particular announcement?
So earlier RBI was not allowing the banks to fund the merger and acquisitions.
Right.
So as we see in the last 5 to 7 years, particularly after the COVID, lot of merger and acquisitions and takeovers are happening in the corporate world. And banks are not able to fund those activities because the enablement was not there from the RBI side. From now the enablement has been given by the RBI, and that is another opportunity for the banks, particularly for the banks, for lending to the corporates for merger and acquisition activities also. And that will also further not only enhance their reach for the corporate, but also increase the reach for the banks also, because if a good corporate has taken over a small company, which maybe it is a weak company, financials are weak, definitely it will help the banks also with the outreach of the large corporate with a more credit-worthy corporate to give further credit to that for the merger and acquisition.
Right. Interesting, sir. Another very interesting announcement that came in was the deposit insurance premiums were made risk-based. So that means that if a bank is good, if a bank is performing well, they will have to spend less on premiums. So what do you see as an impact on Bank of India?
So that is a very welcome move from the Reserve Bank of India. So it gives the costing, reduces the costing if the rating is better for the bank. So any bank which has a better rating will have to give a lesser amount of premium for covering its insurance. So that is something which is very welcome to us, and for Bank of India also it will help. We are already a AA plus rated bank. Okay. So definitely the premiums would also come down for us.
Got it. Sir, lastly, you're at the sidelines of the Global FinTech Fest. What is the sort of road that Bank of India is taking with regards to technology, with regards to FinTech?
Yeah. So this Global FinTech Festival, which we are having today and tomorrow and day after tomorrow, a lot of products are lined up for us for launch. We have integrated with a lot of FinTechs, not only from the loan side products, the asset side product, but also from the liability side products also, and also from the wealth management side products also. So a lot of FinTechs we are taking in our ecosystem for all these products, liability side, asset side, and also from the wealth management side. Apart from that, couple of arrangements we are also making with the fintechs for the cyber security part.
Okay.
So all the entire ecosystem with the digital banking we are absorbing through these 3 days of the global fintech. And apart from that, our entire IT team, our digital team and cyber security team is also here in this GFF, meeting different vendors across the fest and interacting, and it's a good networking session which is happening. And I am sure and hopeful that in these 3 days, the outcome will be very good as far as the digital banking is concerned for the bank.
All right, so that was the management of Bank of India speaking on the sidelines of the Global FinTech Fest. Now with that, it's time to slip into a very short break, but on the other side, we'll get you top buy today, sell tomorrow picks, and even vice versa. But do stay tuned to NDTV Profit.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है। ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, बोलता है कार्तिक, सोलर मतलब सात्विक। ये हर मौसम में चलता है।
The on market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी बने।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
It's an afternoon which is different than the previous three in that we've given up some of the gains. And we were talking about this possibility that we've had 3 strong days of an up move. High chance that some bit of consolidation, some bit of profit booking could come in. This is by no means a giving up of the profits in a very large scale. But yes, some bit of profit booking after 3 strong days of a rally without any plausible reason except for the banking earnings or the banking Q2 updates. You could argue that maybe it was par for the course as well. I just wonder what to do in a scenario like this. Aditya Agarwala, of course, with us. Sudeep Bandyopadhyay joining in with his thoughts as well. Sudeep, thank you so much, both of you, for joining in. Sudeep, before I come to you to get your sense and pick all your grey hair about what to do in a scenario like this, so you don't seem to have any, Sudeep. But Aditya, just from a trade perspective here, right? 3 days of gains, we went up today and just petering off. Is this normal profit booking or would you initiate shorts here?
It's a normal profit booking. Good afternoon, Neeraj. Thanks for coming on the show. And I would rate this also because of the fact that today is an expiry. Don't forget, now Tuesday is the expiry for NSE. So Nifty's move predominantly, I would say, is because of the expiry today. I don't see any big jump on the VIX. There is no panic in the market. It's just normal course of action, profit booking that you're witnessing. So like you mentioned at the start as well, I won't read too much into it. My sense is 25,100, 25,000 is a strong base for the markets. If we don't break 25,100 in trade tomorrow or in last half an hour of trade today, we would see a renewed buying interest in the market, and market should head higher, closer to about 25,400 to about 25,600 in next few trading sessions. My sense is by the time you are heading to the Muhurat trading session, Nifty should be trading somewhere around 25,650 to about 25,700 on the upside.
Okay, got it. And are there stocks that you are recommending right now, or do you want to do that after 10 minutes?
Oh, we can do that right away, Neeraj. I've got a couple of buy recommendations. The first one is SBI Cards for our viewers. Looks interesting to me on the chart setup for a target of 945 on the upside with a stop loss at 890 on the downside. The second is OFSS, Oracle Finance. That also looks interesting. So for a target of 9770 with a stop loss at 9100 on the downside, that is also a second stock recommendation that I have.
Got it. Okay. Sudeep Bandyopadhyay, have you been enthused with the banking updates that have come out thus far? Because that seems to be that one reason why the bank Nifty and thereby the markets have gotten a bit of a leg up despite nothing changing on the macro side.
Well, Neeraj, this was pretty much on the expected lines. We were expecting a good quarter from the BFSI space. Look, a couple of things have happened. RBI policy has been extremely supportive, and even the recent policy announcement has given a kind of boost to the BFSI performance, at least in the market. The kind of liberalization which the RBI is proposing was kind of required, and the banks wanted it for a very long time. This was required for facilitating credit growth and providing incremental opportunities to large banks to play in a space which they were restricted by regulation. So I think this is good for them from the point of view of future as well. Asset quality by and large has improved. Credit demand is coming back. So things are looking good. Of course, you have to be selective. You have to look at the valuation and then buy into BFSI. But by and large, I think this quarter numbers should be good. And this is one space which I think one should really look at from a kind of medium-term perspective also.
Okay, all right. So that's with regards to where these banking counters are concerned. But, there's some counters that are really buzzing on the back of volumes. We've already talked about some of these. There's RHI Magnesia, which is Magnesita, which is, buzzing almost 225 times its 30-day average. There's Ramke Infra, 62 times its 30-day average. There's Uniparts India, which has picked up in the past 1 hour. Trading around 51 times its 30-day average. DOMS, on the back of that note, trading around 19 times its 30-day average. There is ESAB India, which is also trading around 16 times its 30-day average. And lastly, Avalon Tech, trading 12 times its 30-day average. So this is with regards to where all of these volume buzzers are concerned. Aditya, I'll come to you. Any of these counters where you think that, the momentum has just started and probably will continue going forward as well?
There are a few pockets, definitely. The first one I would like to highlight is the Avalon stock. As a disclosure, this is one stock which is also recommended to our clients, so they might hold the stock in their portfolio. It's a very strong going for the stock, back-to-back up moves and strong volumes. And like you mentioned today, massive volumes, on the back of massive volumes, the stock is up some 10-11%. We believe going ahead, stock will continue to see an uptick from here on as well. So for a target of 1450 to about 1500, one can continue to hold on to the stock. If they're looking for a fresh entry at current levels, they can do so with the stop loss just below 1200. And my sense is stock is good to go to levels of 1450 kind of in the coming times. Ramke is also one stock which looks quite interesting to me on the charts, though it has seen some bit of profit taking from the top. But my sense is stock from here on should see much higher levels, closer to about 800 on the upside, with the stop loss on the downside at 620. So this is more like a positional trade that one needs to take, buy now and maybe hold on to it for at least a few trading weeks, and you will see those levels of 800 on the upside.
Okay. The other counter that's been in focus on the back of a brokerage note is HDFC AMC, down by about 2% as we speak, as Citi has maintained a sell with a target price of 4775. The brokerage highlights the company's push into non-mutual fund business like portfolio management services. Vansh joins us to break down as to what the report is indicating and as to what makes Citi bearish on the counter.
Well, yes, in fact, the brokerage has reported that the brokerage says that a non-mutual fund segment has been emerging as a key focus area. In fact, the company has said that the company aims to scale up their non-mutual fund business, that is the PMS and alternative business. Now, the company is planning to retrieve its PMS business, and the investment discipline and brand positioning is being seen as a major competitive strength from the company. Also, the scale-up will be led by the leveraging parentage and distributor tie-ups with the parent as well. Also, the execution risk remains in place in terms of this. However, the brokerage is more interested in the company's increasing focus on the non-mutual fund segment as well. Moving on to the equity flows, the brokerage believes that the retail resilience in equity flows remains strong, and there has been a constructive equity mutual funds expected despite short-term volatility as well. Also, the growth is being aided by steady and sticky recurring SIP flows as well. So this is what the brokerage is saying for HDFC AMC as well.
Thank you so much for bringing us those details. Sudeep, I'll come to you on this one. Your view with regards to where HDFC, AMC is concerned, or anything in that space that you're probably liking?
I do like all the AMC listed AMC players from a fundamental point of view. Look, financialization of savings is happening in India in a big way. We have been witnessing continuous flow through SIPs and other means into mutual funds. And in spite of market volatility, that flow hasn't reduced, and that's very, very encouraging. We believe that the scope is humongous, and all the leading asset management companies will continue to garner more and more assets. Of course, performance will depend on the market scenario, but as far as their AUM is concerned, I have no doubts that they will continue to grow rapidly. And some of the well-managed AMCs will perform better than the other ones. So HDFC, AMC, ICICI Prudential are some of the leading ones which definitely will continue to do well. I do like both these. We also have a favorable view on UTI AMC. I think it's kind of neglected valuation wise. It does look attractive, and one can look at this as well.
Okay. All right.
Interesting. If I can, I just have one follow-up question to Sudeep. And Sudeep, not just AMCs, but I was doing a recent conversation with Manish Chokhani, and he seemed to suggest that if you look at the next 5-10 years, then the wealth creation that has been done in the capital market sector, while we've come thus far, it's probably only 10% done, and 90% of the further wealth creation is still ahead of us. And look at making a basket maybe of capital market related stocks. Would that be an approach that you subscribe to as well? You might differ, by the way. Would love to know your view.
I completely agree with this, because I believe this financialization of saving has got a significant potential to benefit the entire financial market ecosystem. I have been liking this scams and K-fintech for a very long time, and I maintain that I think these market infrastructure companies will continue to do well. Look, they have gone beyond the shores of India, and they are expanding their services into other Asian markets where the remuneration is much more attractive. So both CAMS and K-fintech definitely deserves attention from a long-term perspective. Now, this is all from a long term. Don't look at what is going to happen tomorrow or day after, because the valuation is not cheap. Similarly, look at CDSL and NSDL. NSDL got listed, went up, then corrected, and it was the right thing for NSDL to have corrected, because the relatively between NSDL and CDSL have a much robust income because of the number of folios they have. So but fundamentally both NSDL, CDSL from a long-term perspective as market infrastructure companies do merit attention. BSE, MCX, these are the two listed exchanges. Now BSE, there are a lot of valuation is rich. There are challenges in terms of this, what's going to happen to the option contracts going forward. So I will pause at BSE, but MCX does look good, because the opportunity for introducing newer contracts on the commodity side is huge, and things are going to definitely get introduced. So MCX going forward should do even better, and valuation wise, relatively it does seem attractive.
All right, Aditya, what about your trading strategies? Is it BTST or STBT?
I've got a BTST, Mahima, in Bajaj Auto. Two-wheeler space looks interesting to me, and Bajaj Auto is just broken out from a narrow consolidation phase. So my sense is one can actually look at Bajaj Auto at current levels for a target of 9,400 as a BTST trade, with a stop loss at 8,650 on the downside.
Okay, all right. So Bajaj Auto is the BTSC trade that Aditya has on his radar. But on to our profit intelligence segment, and our today's focus is on pharma, as US push for local generics may not be a good news for Indian companies. Varsha joins us with more details. Varsha?
Well, thank you so much for that. So what exactly US is doing which may impact Indian pharma is, one, they've started this pilot project wherein they've launched fast track review for generics which is made in US. Now this is to boost US generic manufacturing. Now this also aims to cut US's reliance on imports. What does this mean? that there will be slower approvals for Indian facilities. Now, why this matters for India? Because if you see, India exports almost 60 to 65% of generics to US. Now, China's share stand at around 6 to 7%, while Europe's at 30%. So, India exports a lot of generics to US, and tightening of these compliance checks could delay approval from Indian facilities, which could impact the market share of Indian pharma companies, which could potentially have an impact on the margins when it comes to Indian pharma companies. Well, let's talk about which are those pharma companies which has highest exposure to US, starting from Aurobindo Pharma, Dr. Reddy's, Zydus Life Sciences, which has almost 45 to 50% of revenue coming from US. Even Glenmark Pharma, Cipla also have highest exposure to US. Now, which are the companies which are, less exposed to US? You have Sun Pharma, you have Divi's and Torrent Pharma, so which are less exposed to US. Now, talking about this company specific outlook, let's see what Divi's is talking about. So, for Divi's, if you see, margins are expected to improve with high value custom synthesis project and peptides, that is GLP-1. For Torrent, they are expecting operating margin at 32.9% despite higher R&D expenses. For Sun Pharma, so they are part of first wave GLP-1 launches in India. Now, though US is actually fast tracking the review for their manufacturing units, but there are some operational challenges which US might face. One is US labor cost is at $30 per hour. This removes the cost advantage that US would have. Second, if you see, there will be a lot of automation which will be needed, and higher upfront investment which will be done by US. Thirdly, if you see, the new US facilities will take years to build, so generics may remain costly initially. So overall, if you see, though US is fast tracking this review for generics made in US, but there are some operational challenges which US might face. But yes, in longer term, India may have an impact when it comes to generics.
All right, Varsha, thank you so much for bringing us those details. In fact, quite a comprehensive profit intelligence that Varsha has given us on the entire space. But, we've been talking about Global FinTech Fest 2025. It's in full swing, and my colleague Agnidev Bhattacharya caught up with Upasana Taku, the co-founder and chairperson at MobiKwik. She spoke to us about the company getting an NBFC license to expand lending operations without pivoting into pure play NBFC business. Listen to that conversation.
You're right, it is exciting to be a GFF, because if you're a fintech founder, then GFF is like your mecca, where it's an annual event. Everyone tries to put their best foot forward. So to that extent, MobiKwik, having been a player in the fintech ecosystem last 15-16 years, this year we have 4-5 new things that we are displaying at our display center here at the GFF. The first and the most interesting one is a concept product. It's a proof of concept. It's not a production product. It's called Say to Pay. It's a voice enabled payments product where it can be a transaction you can do from the MobiKwik app conceptually that we are demoing, where you would, just like you use Bluetooth on your car, right? Make a call to Agni, make a call to Rakesh. So you could say something like, make a payment to Agni. Make a payment of 500 to Agni, and it would ask you, and it would take that money from your wallet, and it would go through. So this product is something that we are demoing. We've developed our own models for this, for voice recognition, and obviously we are also using bioauthentication for this product. So it's a very cool product. It's nowhere close to being ready, but we are excited and we are showcasing it like a concept product, because we believe that in the next few years that are coming, as we want to take payments, digital payments as an inclusion product to the tier 3, tier 4, tier 5 India, we will have to go to voice and we will have to go to vernacular. And this is sort of the beauty and the simplicity that we are trying to showcase in this concept product.
Lovely concept there, ma'am. I would like to go on to my next question. So MobiKwik has recently in a regulatory filing said that they will be investing 10 crore into their NBFC arm. So just wanted to check, what business will this NBFC arm be operating in exactly?
So as you are aware, MobiKwik has two large businesses. One is the payments business, and secondly, we also cross-sell financial products, including credit products via our NBFC and bank partners as a lending service provider under the digital lending guidelines. So to that extent, I think this is an attempt for us, to incorporate a company which is the 10 crore that you're talking about and make an application to have an NBFC for this purpose. We are not looking at becoming the lender, but having your own small NBFC also gives you benefits in terms of how you can understand your user better and do the matchmaking between the large lending partners that we have. So it is that, in that regard that we have put in the minimum required capital.
So ma'am, just to quickly follow up on that, does MobiKwik Financial Services, like you said, you don't want to become a lender, but to be an NBFC unit, has it gotten the RBI license for being an NBFC yet, or is that something?
No, basically it is an indication that we will be filing. So we incorporated a company, we have put in the minimum required of capital, and we might be applying for this.
And ma'am, next I would like to focus more on your lending business. You recently stopped short-term lending through Zip and have been focusing on long-term lending more recently. So how much of an impact from the closure of the short-term lending has already been seen by MobiKwik, and how much of a pressure do you expect that to play out in your balance sheets going forward on a quarterly basis, if you can give me any color?
So I think the sort of slowing down of unsecured lending in general can be seen, in our numbers right from last August, September of 2024. But I think what you will also see that in Q4 as well as in Q1, the results of which are out, we have shown about 30 to 33% scale up or growth in terms of the lending disbursals or the lending GMV as we call it.
All right, so that was the management of MobiKwik. In fact, viewers, you can listen in to the entire conversation. It will be available on our YouTube handles, and not just this conversation, all the conversations that our team is doing at the Global FinTech Fest. But with that, Sudeep and Aditya, thank you so much for taking out the time and giving us all those insights throughout the show. Let's take a quick look as to how the markets are ending today. The expiry playing, of course, its role, the Nifty 50. Now trading only about 0.1% higher. The Bank Nifty also has cooled off quite a bit, trading only 0.2% higher. If you can try to pull up the Nifty 50 chart quickly, that will give us a picture as to how, in the last 1 hour we've seen, expiry play its part, and we've seen the Nifty declining almost at its day's low point. Let's try to pull up the heat map and see as to what counters have done well and what counters have kind of not done well. Axis Bank, Tata Motors, Trent, all three of them closing 2% lower. Tata Consumer, Hindalco, Infosys, SBI are some of the counters that are closing around 1% lower. There's counters like Bharti Airtel, Jio Finance, Bajaj Auto, HCL Tech, Ultratech, all counters in the green, seeing gains about 1 to 1.5 odd %, keeping the Nifty in check. Let's try to pull up the advanced decline ratio and see as to how that chart has fared. It's been a zigzag day. We did, open at a note where we had more advances versus declines. So it was a buyer's market, but then tides did turn and that gap has widened at the last 1 hour, and we've seen declines more than that of advances. Let's try to pull up the sectoral heat map and see as to how sectors have done. There you go. There's Nifty Realty that's leading the pack now, up by about 1 odd %, followed by Nifty Oil and Gas, though cooled off a bit. Nifty Oil and Gas, Nifty Pharma up 0.5% as well. But something that's seen profit booking today includes your Nifty Media, Nifty Defense, FMCG slid quite a bit into the red, almost down 0.4%. PSU Banks and Metal also in the red. Let's try to pull up the BSE 500 and see as to what are the counters that have buzzed in the broader end of spectrum. You have RHI Magnesita up 9%, Vodafone Idea, Ircon, IGL, Divis, HLE, Glasscoat on the green side. And on the flip side, you have KIOCL, which is locked in a lower circuit today after seeing gains of about 3 odd days, down by about 10 odd %. Tata Investment on the back of the Tata Capital IPO and subscription numbers, Happy Mist Mines, Restaurant Brands, KPR Mills and Hitachi Energy, some counters in the red. Lastly, let's try to see as to what are the cues that you need to watch out for post-market hours today. For the trade tomorrow, you have your Japan current account data coming in, so keep an eye out on that. You have your board meeting of Adani Enterprises for fundraising, so eyes will be on that as well. Travel food services will experience an anchor share lock-in of around 2%. IPO listings that you need to watch out for tomorrow, there's Om Freight Forwarders, Advance Agro Life. These are the two listings that you'll see on the bourses tomorrow. And of course, the ongoing IPOs will continue. The buzz in the primary markets, of course, will continue. But with that, we're completely out of time on this edition of India Market Close. But do stay tuned to NDTV Profit for more news and updates on the other side.
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कार्तिक। सोलर मतलब सात्विक, ये हर मौसम में चलता है। ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कार्तिक। सोलर मतलब सात्विक, ये हर मौसम में चलता है।
The market's most influential voices, the visionaries who decode the future of wealth, unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी।
Hello and welcome. You're watching Market Express and I'm your host Himakshi Bahugna. Now let's get straight into the show. So viewers, let's just see how the markets have fared today first. Sensex and Nifty extend their winning streak to a fourth session, which is led by the gains in the energy and oil and gas shares. Now, some of the biggest gainers among the Nifty 50 stocks are HDFC Bank, Eicher Motors, Bajaj Finance, Jio Financials, ICICI Bank, and among others. Now, there's a mixed sectoral performance, seen on the Dalal Street today, with pharma and realty leading the pack. Now, these sectors were up almost 1%, while sectors like the FMCG, metal and media were down 0.5%. Now, IT and PSU banks also closed flat with a negative bias. September sees the highest monthly outflow of foreign portfolio investor funds in over 6 years. So according to the data from the National Securities Depository Limited, now FPIs have sold shares worth $690 million last month. Now, this marks the biggest monthly sell-off since June 2019, when the outflow stood at $724 million. So this heavy selling pressure comes as the broader BSE Healthcare Index registered a decline of 1.3% for the month. Now, the index, which tracks a basket of 119 companies across hospitals, drug makers and also medical equipment manufacturers, has clearly felt the pinch. Now let's shift focus on the counters that have been buzzing in trade today. First up, we have Brigade Enterprises. Now, it has signed a joint venture for premium homes in West Chennai with a project value of 1,000 crore rupees. So for FY26, the company eyes double-digit growth in the pre-sales. Average realizations are expected to hold steady at 10,000 rupees per square feet. Dilip Bilcon's JV bags a 597 crore solar project from Madhya Pradesh Jal Nigam. So the JV, with a 74% stake held by the company, will develop a 100 megawatt ground-mounted solar PV plant. Now, the power supply will run for 25 years post-commissioning with 31 crore equity infusion from the Jal Nigam. Now, staying with the movers there, Metropolis Health post 386 crore rupees in the Q2 revenue, and also marking a 23% year-on-year rise. So growth mirrors Q1 despite fewer seasonal illnesses there. Core diagnostics continue to deliver high single-digit margins as well. Let's also look at Trent, which disappoints with the weaker than expected business updates. Now, it's the worst performer in the Nifty 50 this year, which is down 33% year to date and also 39% since its inclusion. So technicals show relative strength index below 30 and are signaling an oversold territory. Now on to some brokerage notes. Morgan Stanley maintains an overweight rating on Trent with a target of 6,359 rupees. Q2 update misses the expectations, though standalone revenue grows 17% year-on-year. Trent opens 13 new West Side stores, the highest in 5 years. EBITDA margin is also expected to improve to 17.5%. Goldman Sachs maintains a neutral rating on BSE and trimming its target to 2,220 rupees. So NSE's aggressive push erodes the BSE's edge in contract size and premium. BSE's market share gains may peak at 40% between July 2026 and March 2027. Brokerage house Axis Capital has just delivered a strong buy rating on Bharti Hexacom, bumping up its price target significantly. So the new target now stands at 1,985 rupee per share, and a solid jump from their previous estimate of 1,887 rupees. So what's behind the bullish call? Axis Capital cites superior execution in Bharti Hexacom's mobile segment, where healthy subscriber trends are also expected to sustain. So crucially, the brokerage believes that the company's geographic footprint makes it an ideal candidate for an early adoption of fixed wireless access broadband. Now, talking about the valuation then, it remains at a slight premium to parent company Bharti Airtel. Axis suggests Hexacom's recent market underperformance has now opened up a compelling valuation upside. So in short, Axis Capital sees clear runway for growth, making Bharti Hexacom a top pick in the telecom space. Switching gears to the metal space, Shah Metallics has released its September business updates, revealing a mixed picture across its key product segments. The stainless steel division faced some volume headwinds, with sales down 11.4% year over year. However, the company successfully managed pricing power as the average realization for stainless steel jumped 8.2% during the month. Meanwhile, Shyam Metallic's aluminium foil segment delivered growth on both the fronts. So volume sales in the aluminium foil edged up 4.1%, which is more significantly, the average realization saw a robust increase, climbing nearly 12% year over year. So the strong pricing performance in both the steel and foil highlights the company's ability to defend the margins despite a softer spot in the steel volumes. Let's also talk about KRN Heat Exchanger and Refrigeration, which is actively expanding its footprint in the transportation sector after a significant business deal. So the company's wholly owned subsidiary, KRN HVAC Products, has finalized a business transfer agreement with Sphere Refrigeration Systems Private Limited. So the agreement covers the full acquisition of the SRSPL's bus air conditioning division, which is a move that immediately allows KRN to broaden its cooling solutions portfolio across growing transport and mobility segments. Now, this strategic integration is a key component of KRN's plan to build a more diversified HVAC business catering to industrial, commercial, and now transit applications. So KRN's management anticipates the acquisition will lead to a positive bump in future revenue, profitability, and the overall market presence. Now, a closer look at a major player in India's financial sector, that is the HDFC Asset Management Company, or the HDFC AMC. So Citi has maintained a sell rating on the stock, setting a lower target price of 4,775 rupees. So Citi's rationale hinges on two key factors. First, that they believe that the current valuation is simply too high. Second, there is a concern that HDFC AMC's growth in the non-mutual fund businesses may be slower than the market expectations. So this is a crucial metric as the company attempts to diversify its income streams beyond its core asset management services. So despite the short-term pressure, the company remains a dominant force, maintaining its position as one of the largest and most profitable asset managers in the country. Now, time for an NDTV Profit exclusive. So the government gears up for a strategic stake sale in the PSU banks via the OFS route. So this fiscal, it's going to happen. At least 2 banks are expected in the first round, with plans to offload up to 20% across 5 banks. So the move aims to meet SEBI's public float norms and also boost the market participation. Shifting focus to Jaguar Land Rover, which has announced the phased restart of its manufacturing operations. Remember, this comes after a crippling cyber attack in the late August forced, the luxury car maker to halt the production for over a month. So JLR has confirmed that the controlled phased restart of operations will begin this week. It's, the electric propulsion manufacturing center and also the battery assembly center in the West Midlands are set to resume the activities from tomorrow, with the key areas of the Solihull plant, including the body shop and paint shop, also seeing a return of the employees. So vehicle production will subsequently resume along with the Range Rover and Range Rover Sport production lines at Solihull. So to support its vital supply chain, which has suffered highly, during the shutdown, JLR is introducing a new financing solution there. Shifting gears to a commentary coming in by the finance minister. So she has issued a caution on the global stage, stating that technology must not be weaponized. Speaking at an event, the minister stressed that the focus must remain squarely on using innovation as a catalyst for economic growth and also development. So her remarks come amidst the rising global geopolitical tensions and also concerns over the misuse of technologies. She has urged nations to ensure that technology remains inclusive and accessible rather than being used to create new divides or impose dominance. So Sitharaman underscored the crucial need for international collaboration to maximize technology's benefits for the world economy. Now let's also shed some light on the IPOs. So the WeWork India initial public offering is facing serious questions just as its subscription window has closed. So governance advisory firm InGovern Research Services has raised multiple red flags, warning investors about the company's financial and legal vulnerabilities. So the core financial concerns highlighted include negative net worth and also consistent negative cash flows. InGovern points out that the company's high lease cost consume over 43% of its revenue. And also it reported profit for the last financial year was due to a deferred tax credit and not the operational turnaround. So on the governance front, the entire 3,000 crore rupee IPO is structured as an offer for sale, meaning all proceeds go directly to the selling shareholders and promoters with no new capital being infused into the company for growth. So, the advisory firm has flagged ongoing serious criminal proceedings against the promoters. OpenAI and Advanced Micro Devices have reached a deal that could see Sam Altman's company take a 10% stake in the chip maker. So AMD stock has skyrocketed 23.7% after this announcement. Now the deal positions AMD as a core strategic partner in OpenAI's massive infrastructure expansion and also gives Sam Altman's company a long-term alternative to its current reliance on NVIDIA. Now onto the deal contours then, OpenAI will deploy 6 gigawatts of AMD's Instinct GPUs over several years and also multiple generations of hardware. So the rollout starts with 1 gigawatt in late 2026 and expanding as OpenAI scales its AI models. Morgan Stanley has released a bullish forecast for Indian aviation giant Indigo. So the brokerage firm has given Interglobe Aviation, the parent company of Indigo, a buy rating. Now this implies an upside of almost 25% from the current market price. So Morgan Stanley's confidence is driven by 3 key factors, which is Indigo's focus on maintaining its status as a cost leader in the industry, its international expansion strategy, and also the under-penetrated demand for the air travel within India. So the airline is set to increase its international capacity share with an accelerating pace of global expansion expected as a new long-range aircraft join the fleet over the next 2 financial years. India's digital payment system, that is UPI, is being hailed as a global game changer by one of the world's biggest chiefs. So PayPal President and CEO Alex Chriss has announced a move to enable a world of interoperable digital wallets with India's UPI as a key partner. Speaking at the Global FinTech Fest, he stated that the National Payments Corporation of India's UPI is the first such payment system to be integrated into this new global platform. So this partnership is set to simplify the cross-border commerce, allowing Indian users to shop internationally using their familiar UPI app. So the CEO stressed that India is already a world leader in payments innovation and its role will be crucial in building a seamless global digital economy. So the move cements UPI's growing international footprint and also PayPal's focus on connecting India to the rest of the world. India could actually see a new wave of reforms by Diwali as Niti Aayog pushes to boost manufacturing competitiveness. So, Niti Aayog chief cautions that protectionism in specific sectors could actually hinder the competitiveness. In a major crackdown on a global online fraud racket, the Enforcement Directorate today carried out search operations at 15 locations across Delhi, Noida, Gurugram, Haryana, and also Mumbai in connection with a tech support scam case. So the searches were conducted under the provisions of the Prevention of Money Laundering Act, that is the PMLA, and following multiple FIRs registered by the Delhi police against Karan Verma and also several others for cheating foreign nationals through fake technical support services. India is expected to remain the world's fastest growing major economy, underpinned by the strong consumption growth, improved agricultural output and also rural wage growth, according to a World Bank report. So the World Bank raised India's growth forecast to 6.5% for FY26 from its earlier projection of 6.3% in June. And this is citing resilient domestic demand, strong rural recovery and also the positive impact of the tax reforms. Supreme Court has mandated new standards for road design and maintenance across the country. So the Apex Court has ordered all the states and union territories to frame and notify new rules within 6 months. So this directive specifically targets the design, construction, and also the maintenance standards for all roads other than national highways. So crucially, the court also ordered states to create rules to regulate the movement and also safety of the pedestrians and non-motorized vehicles, such as bicycles on the public places and national highways. The Punjab government has banned the sale, distribution and use of cold rift cough syrup in the wake of 14 children dying in Madhya Pradesh, reportedly due to the consumption of the contaminated medicine. So the cough syrup manufactured in Tamil Nadu was found to be dangerously adulterated with a highly poisonous substance. So the tragic deaths triggered a national health alert, leading to suspensions of officials in Madhya Pradesh, arrest nationwide, stock confiscation, and also immediate stringent changes to the drug prescription guidelines. In yet another alarming incident, the Jafar Express has come under attack near the Sindh-Balochistan border. Initial reports suggest that unidentified assailants opened fire on the train, sparking panic among passengers. Now, this marks the second attack on the popular passenger service in the recent months, raising serious concerns over rail safety in the region. Security forces quickly responded and also cordoned off the area, while the train was halted for inspection. So no casualties have been reported so far. An investigation is now underway to determine the motive and also track down those responsible. On to some global news now. US President Donald Trump has announced on Monday that all the medium and heavy-duty trucks imported into the United States will face a 25% tariff starting November 1, and escalating his push to support the American manufacturers from foreign competition. Trump, who has made the trade protectionism a key element of his economic agenda, said that the move is intended to protect the domestic truck manufacturers from what he called unfair outside competition. We also turn to Washington, where the US government shutdown has entered its second week, with analysts warning of a protracted crisis that could actually last for weeks, not just days. So experts fear the current bitter political climate or the tribalism has made a compromise extremely difficult. So the deadlock centers on a Democrat demand to extend the crucial healthcare subsidies, which are due to expire and also would hit millions of low-income Americans. So President Trump has blamed the minority Democrats for blocking the necessary funding resolution, while simultaneously also increasing the pressure by threatening mass permanent redundancies for federal civil servants. So this current standoff risks rivaling the record 5-week shutdown seen in 2019, which cost the economy billions. Rishabh Shetty's prequel Kantara Chapter 1 continues its run at the box office. The film, which takes audiences back to the ancient era of the Kadamba dynasty, has solidified its position as a blockbuster. So the movie has now surged past the impressive 260 crore mark in India alone. The total collection stands firmly at 39 crore rupees, although a weekday dip was expected following a massive opening weekend. So the film remains a strong performer. In a controversial move, UEFA has approved Barcelona's upcoming La Liga clash against Villarreal to be played in Miami, marking the first time a Spanish league match will be held in the United States. So the decision has sparked widespread protest from fans and Spanish football purists, who argue that the shift priorities commercial interest over traditional. Despite the backlash, La Liga and club officials insist the move will expand the league's global reach. So the match is expected to take place later this season, though legal and logistical hurdles still remain. French football star Kylian Mbappe is currently undergoing treatment for what coach Didier has described as a small niggle during the national team's training camp. So while the injury is not believed to be serious, The coach confirmed that the medical team is taking all precautions to ensure Mbappe's full recovery ahead of the upcoming fixtures. Now, the news has sparked concerns among fans, especially with the crucial international matches approaching. However, the French camp remains confident that their captain will return to full fitness very soon. With that, viewers, it's a wrap on this edition of Market Express, but stay tuned to NDTV Profit and don't go anywhere.
The market's most influential voices. The visionaries who decode the future of wealth. Unveiling strategies, insights, and the wisdom to turn opportunities into lasting value. This Diwali, ignite your journey to prosperity. This is where the market, money, and the masters converge. For your profit. NDTV Profit Ignite, 10th October. The world's defining stage. Leaders, visionaries, decision makers, confronting the challenges of our time.
हमारा प्रयास होगा भारत की सेंचुरी सिर्फ भारत की नहीं बल्कि पूरी मानवता की जीत की सेंचुरी।
NDTV World Summit 2025, Edge of the Unknown, 17th to 18th October, only on NDTV.
NDTV Good Times is something that we're supremely excited about.
We just don't want to do live entertainment. We want to create experience for you.
And NDTV Good Times is one of the most marquee and iconic ideas that NDTV came up with.
मेरा जो रिश्ता है एनडीटीवी के साथ वो बहुत बहुत पुराना है।
अरे और रहमान
सोनू निगम के लिए जोरदार तालियां।
ट्यूबवेल में जल ताकि खेतों में चले हल, तो लगाइए सात्विक के सोलर पैनल। घर हो या खेत, होता है कार्तिक। सोलर मतलब सात्विक, ये हर मौसम में चलता है।
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore.
Benchmarks extend gains for the fourth consecutive day but closed nearly flat with the Nifty hovering around 25,100. The Sensex ended in positive territory, recovering from a 400-point intraday dip. Mid and small cap indices outperform while sectoral indices show mixed results. Jaguar Land Rover restarts manufacturing a month after the cyber attack disruption and also introduces a new financing solution to pay suppliers early. The government plans to sell minority stakes in at least 2 public sector banks through OFS, plans to offload about 20% stake in total across these banks in a phased manner. Sources say meaningful progress is expected this fiscal. Announcement on the MSCI rejig expected on the 5th of November. Fortis Healthcare, GE Vernova and Paytm are set to be included into the index, while Tata Elxsi and Astral may be excluded. The LG Electronics IPO books 89% as of 4 p.m. on day 1 of subscription. Non-institutional buyers lead the issue by subscribing 1.78 times. Commerce Minister Piyush Goyal says the US government shutdown is delaying India's ongoing trade talks with America, adds that India and the EU are in advanced discussions to conclude a fair and balanced free trade agreement. Proxy firm InGovern raises legal and financial red flags on WeWork India's IPO, highlighting the company's negative net worth, consistent losses and the ongoing criminal proceedings against the promoters. Navi Mumbai Municipal Commissioner Dr. Kailash Shinde speaks exclusively to NDTV Profit, says the city is ready for the mega airport launch tomorrow. Good evening, you're watching Profit 360 on NDTV Profit and I'm Sanjana. Over the next half an hour, I'm going to take you through the latest in markets as well as national and international news. So let's dive right into it and have a look at how the markets fared today. Sensex and Nifty ended their winning streak to a fourth session led by gains in the energy and oil and gas shares, with some of the biggest gainers among the Nifty 50 stocks were HDFC Bank, Eicher Motors, Bajaj Finance, Jio Financial, ICICI Bank, among others. Varsha now joining us with a wrap of all of the market action.
Yes, benchmark gain for the fourth straight day while closed flat for the day. Nifty closed nearly 25,100 mark. IndusInd Bank and Bajaj Auto gains the most when it comes to Nifty. While Axis Bank and Tata Motors fell over 2% in trade, emerged as the top losers in Nifty. Nifty Midcap 150 gain for the sixth day in a row, while Vodafone Idea and IGL gain the most in Nifty Midcap. Onto the small cap, Nifty Small Cap 250 gains for the fifth day in a row. RHI Magnesita gain over 10% for the day, emerges as the top gainer when it comes to Nifty Small Cap 250. While sectoral indices close on a mixed note, Nifty Realty, if you see, gain over 1% for the day, emerges as the top gaining sector for the day. Nifty Realty Auto gain for the second consecutive day. Nifty PSU Bank snaps 2-day gain streak, while Nifty Oil and Gas Pharma gains for the fourth day in a row.
Thanks so much for that, Varsha. Meanwhile, Abhay Agarwal, MD and at Piper Serica Advisors, says that he remains bullish on banking and financial sector, but also mentioning how RBI's push for easier credit offtake will benefit both the banks and the NBFCs. Let's listen in.
We are very optimistic and almost bullish on the banking and financial services space. I think over the last 4 quarters, or probably 6 quarters, 4 to 6 quarters, we saw a cyclical downturn which happened because of overlending, lack of credit offtake, low collection ratios. RBI tougher mandates to do provisioning, which had impact again on the balance sheets. The alpha definitely will be from the smaller banks, especially some SFBs like Ujjivan, Jana, that are expecting a universal banking license soon. Purely for the fact that their valuations haven't recovered. Even as the earnings are in sight of being recovery. If you look at the book value multiples, they are about 1 to 1.5 times. So as the earnings improve, I think that there will be both a multiple pickup driven by higher earnings and higher valuation multiple.
Meanwhile, Jaguar Land Rover has initiated a phased restart of its manufacturing operations following a major cyber attack in late August that halted production for over a month. Now, the luxury automaker confirmed that operations will resume gradually starting this week with its Wolverhampton engine plant as it works to restore full capacity across sites like Solihull and Nitra in the coming weeks. To support its supply chain, JLR has launched an innovative financing solution as well, enabling suppliers to receive payments up to 120 days early, with the company covering financing costs to ease cash flow pressures that were caused by the disruption. But for more details, let me quickly go across to my colleague Danish, who tracks the sector closely for all of the details. Danish?
Well, Jaguar Land Rover in a statement today has announced that from Wednesday, that is from 8th of October, the company will be restarting its manufacturing facility in the UK, and initially the particular center that the company will be initially restarting will be the particular center which manufactures engines and other battery related items. Similarly, on the same day itself, they will also be restarting work at the other facility, which is the paint center and the body shop. So as far as restarting all of this is concerned, JLR will be initially restarting production facilities in the UK first, and once this phase-wise manner restart is done, then they will be restarting its manufacturing facility in Slovakia. And as far as JLR's JLR supplies are concerned, for that the company has announced that initially, as soon as the production restarts, JLR will be offering them cash payment first, and for the other qualified JLR suppliers, they have a different system in place which will be implemented as soon as the production restarts. So all in all, if we see almost a month after JLR suffered a cyber incident, things are now getting better for JLR, and from Wednesday 8th October, we will see manufacturing restarting at JLR's facilities in the UK.
Thanks for that, Danish. And meanwhile, the November